Hello traders and welcome to our weekly technical outlook. Today we're going to dive into the market analysis, and I think there are some opportunities where we can enter the market. So let's start with the Euro USD as usual. We have first of all a strong pullback from 1.0940. The Euro USD simply rallied, but actually the pullback went very strong, as you can see from this very strong area of resistance. Now it's simply sitting above the 1.06 and 1.0540 support zone. So these two levels are very important, just keep them in mind. RSI, as we can see, cooled down, giving bulls some room, but if 1.06 breaks, bears could simply take over quickly. So watch the market and keep an eye on the key level that I'm talking about. As for now, I think having the pair trading below their strong resistance would simply push the pair farther downwards. And our targets in this case are going to be the support zones I mentioned previously. Let's move to GBP/USD. Cable is simply holding above the 200-day moving average, as you can see. It's simply consolidating around 1.2950. The momentum is simply fading, but as long as the price stays above 1.2597, let's say 1.26 actually, bulls are still in control. A clean break above 1.30 opens more upside potential. So we still have, let me highlight it for you, this area as a strong area of resistance. If it is broken, the pair could simply continue going upwards. Let's move to gold. Gold actually broke out past 3,600. It's moving very sharply to the upside with a strong bullish momentum. RSI, as you can see, is simply overbought. It's simply above 70. 70 is considered to be an overbought area where we can sell actually. But I'm not saying that we can enter the market right now because there is no signal of reversal, no sign of reversal yet. As long as we stay above 2,790, we are bullish. But at the same time, this is for the long term. For the short term, I think as long as the pair stays above 2,950, this could simply push the pair further upwards. So this means bulls are still in control. A clean break above the previous high, this could simply push the pair higher and higher. Okay, so bulls are still in control. Bulls remain in charge. Just watch for possible short-term pullback from this area, I think, but no signs for now. We just need to wait. Let's move to Aussie. Australian dollar against the American dollar is stuck below, simply stuck below 0.6380, and for the long term, I believe below 0.6420. Okay, and it's simply trading sideways around 0.6295. I can see on the chart some like weak momentum that could open the way for a drop toward 0.6165. This is just in case buyers don't step in soon. So as for me, I would enter the market. I would go short if the market reaches 0.6420, and I would go long if the market reaches this zone of support. Now, no entry point, as you can see. We just need to wait. Finally, with GBP/JPY, the pair simply bounced from 188 zone, which is this area, as we simply clarified earlier in our analysis. I think the analysis the beginning of the month, maybe 1 month before, I was talking about this, and the market started going upwards the second it did hit this zone. Now I think the pair is heading toward key resistance at 169.80, which is this, very important, this, and then 198.80. So we have two targets, okay, 196.80 and 198.18. Now, as you can see, we can see that momentum is picking up, but that level could act as a, let's say, a strong area unless bulls push through this area. Let's wait and see what's going to happen. We just need to wait until the price reaches this area of resistance. If it shows up bearish evidence, we might go short. Okay. If the market goes back to reach this area of support, then we might go long. Now, the idea is that we are waiting for, now we're using no indicators, as you can see. Maybe this one, but actually I can get rid of it and nothing wrong with this. We're just trying to find areas where we can enter the market, an over bought area or maybe an oversold area. An overbought area is considered to be this one. An oversold area is considered to be this one. Okay, an oversold area. This is where we can buy, and this is where we can sell. Now, in between these two levels, no action could be taken because it's going to be very dangerous. Now, you're going to ask yourself, where I'm going to place my stop loss. Now, in order to enter the market in this very case, your stop loss must go above this level, okay, in order to go short, in order for you to go short. So in this case, we are simply maximizing the risk and maximizing the gap between the entry point and your stop loss, which means that your stop loss would be very big in this case, your stop loss. Your take profit is going to be somewhere here. It's going to be like 1 to 1. But if you want to have a better opportunity, I think you might wait for the price to reach this zone, the extreme, where you can sell. Now, it's not about the market reaches this area and then we go short right away. It doesn't go this way. The thing is that we need to wait until the price reaches this area and shows up bearish evidence. This is the action that we need to make sure that the market is going downwards as we expect. The same thing could be said about the downside, but the other way around, as you can see, because we're going to go long if the market reaches this area of support. So that's it. I hope this helps, and thanks for watching the video. Have a wonderful week ahead.